Good afternoon everybody, Max Norbury here again with the latest video. Now guys, today we are going to be taking a look at a methodology that I myself have been glued to from the beginning of my career. This is something that I've taken along with me throughout the last 11 years in the financial markets, and something that has been reinforced in me time and time again, regardless of the actual strategy that I use. Now these simple steps really do provide a lot of security in your trade ideas. They give you confidence, they work on your psychological mindset in the markets as well, and above all else guys, they really do maximize your profitable trades tenfold. Okay, and it's just following some really simple steps. Now these steps can be a little bit of a struggle for many of you as you lack certain degrees of things like patience and discipline in the markets. But by practicing these simple steps, regardless of the system that you use, this is going to work out all of those wrinkles, iron out the wrinkles as they say, okay? So guys, I just want to, bit of a disclaimer, this is not a standalone strategy. This is a bolt-on. Think of this as an additive. You have your strategy. Well, if you add this to the strategy, you are going to see increased performance in your trading portfolios. Okay guys, so without any further ado, I'm really looking forward to getting involved in this one. So please join me on the screens and we'll get stuck in a moment. See you there. Hey there guys, welcome back. So as I just said in the intro, we are going to essentially be taking a look at breakouts and retests. And as I also said just a moment ago, this is really, the whole structure around waiting for a breakout to happen and then waiting for the retest before the continuation, like we kind of touched base on in one of the previous videos on order flow and supply and demand. It boosts probabilities to any kind of trading scenario that you're taking. It doesn't matter about the strategy. This isn't, like I said, a standalone strategy, but by incorporating this very, very simple method, which relies on nothing but patience. Okay, that's all you need. You just need to be patient. So long as you can be patient, this will significantly increase the probabilities of trade ideas in whatever system you're using. It doesn't matter what system it is. If you wait for those retests and those continuations to take place, you will find yourself being able to look at more profitable trade ideas in the long run. Okay, so what we're going to be looking at now at the moment is we're going to be looking at a stock got AMC Networks here, and we're going to be going through price action. We're going to be identifying some levels of supply and demand, which isn't the main focus, but what we're going to be looking for is that retest and that continuation, and the differences between what trade ideas look like for normal retail traders who are executing positions without that patience, and then looking at the traders who are indeed being patient and waiting for those retests to take place. Okay, so we're going to go through some price action in, like I said, in AMC Networks. Take a look at what's been going on in this stock and just looking at those breaks and retest continuations. So, like we did in the last video, right? We're going to be sort of plotting some supply and demand zones first of all. So in a bearish wave, we want to be identifying the zones at the beginning of the price action pullbacks. Okay, so the beginning of the price action pullback is situated here, which is the beginning, of this. We have this really nice corrective here on the daily time frame. So we have this really nice big drop down. We come into this liquidity pool. Price action comes right the way up, and then we start to make our way down again. Okay, now straight away, actually, to be completely honest, I didn't even notice this one, but right here we're able to see one of these examples happening in the live environment. So if I'm looking at shorting this AMC stock, okay, I'm waiting for it to break underneath here. Now, retail traders are notorious for lacking patience and discipline. Okay, if we see, okay, a price breakout of this area here, now you've got to understand that the more amount of times a zone like this is hit, the more amount of liquidity that is inside it. Okay, the more amount of times a zone like that's hit, the more money there is in it flowing through and waiting for that breakout to take place. So the reason this is because if you think the banks, the big institutions, of course they're going to be the ones ultimately moving the markets. I think in the stock markets in the world, there's probably about 3.5% of liquidity made up by retail traders, right? Maybe 4%, not entirely sure. 3 or 4%. But the banks know, right, that the more amount of times a level is hit, the more easily identifiable it's going to be for a retail trader to know that that level is there and it's being used as support and resistance. So what a retail trader does is he waits for some momentum to get through that level and then executes his trade. So he sees the momentum to the downside like this, okay, to the right of the screen, sorry. We see this big bit of momentum down here, and this area is exactly where the retail trader wants to execute a trade. And I urge yourself to ask yourself these questions. Would you, looking at that chart, looking at the volume, looking at the quality of that move, having broken through the level of supply and demand, we've got a really nice path of least resistance here. Would you take that trade idea? Because I guarantee many of you watching this video right now, you would take that trade idea. So what I'm going to do is I'm going to set myself up. I'm just going to set myself up a simple ray here just to represent the entry of the retail trader. Okay, and I will put it so it's super clear. Retail trader entry. Okay, so here we have the retail trader's entry into the trade idea. Okay, but as soon as the retail trader enters into that trade, the price action comes back up. Okay, now let's say, for example, you're a retail trader and you're shorting AMC stock. AMC stock's trading at $55 a share at the moment. Okay, where's your stop loss going to be? Well, your stop loss is going to be down on a lower time frame, and your stop loss is probably going to be about, let's say, I don't know, 150 points up, 150, maybe 150 pips up on that one, maybe 3% in the stop loss. And to be honest, that's quite gracious. Most retail traders suffer from things like loss aversion. So therefore, retail traders probably not going to have too much of a big stop loss because they're so fearful of trades reversing on them. So what's going to happen in the whole sort of psychological process now is the retail traders enter this trade. The trade starts to turn around. It triggers all of the retail trader stop losses that have just been taken out here. That boosts the momentum in the market, and the market starts to shoot up. Now what does the retail trader do? Retail trader's thinking to himself, oh wow, actually, do you know what? I've just taken a big loss on AMC stock short, but now the stock's starting to surge. Maybe I could get some of my gains back. So what does the retail trader do? The retail trader goes and executes a long, and he executes the long right here, right up at the highs, thinking we've got one big old green candlestick, momentum looks absolutely fantastic, so I'm going to enter my trade in here and ride the wave back up to the upside and double the profits on the loss that I took. So I've lost out maybe 2-3% on that trade idea to the downside. Now I'm going to make 6% back on the long. But the problem is, what's actually happened here is this area down here has come up. Okay, we've come back to retest the liquidity pool. Now remember, this is a big level of resistance, okay? And the retest confirms it as resistance, because after that point on, price action starts to take a bit of a turning point, and then we end up coming back down here to the original entry of the retail trader. So now the retail trader's taking the loss here, the retail trader's taking the loss here, and by this point, he's suffering from a multitude of different psychological things. Got fear, panic, anxiety, definitely not going to be suffering any euphoria at this stage because he's just losing trades. But the cognitive biases of the retail trader are going to ultimately be changing. Those cognitive biases are going to be thinking about loss aversion. They're going to be thinking about confirmation bias, which is going to be overruled at the moment by the momentum in the markets. All we've seen here at the moment is a breakout of support. We've come back to retest it to prove that liquidity pool is going to act as resistance and then continuing to the downside. So at the moment, the market continues trading lower, it continues trading lower and going lower. And by this point, there's been a really nice trade idea right the way down to $49.89 a share. And guys, it continues back down to $47.50. So $47.50 a share, which would have actually ended up being a really nice trade idea. So this is just one example, and we have literally looked at the chart for like 60 seconds. So we're going to move on now. I'm going to remove one of those bars. I'm just going to put that down there for now, and we can come back to that. So as we go on up here, we can see price action comes up to this level again. Okay, now let's I want to just play this scenario out in our heads. Okay, excuse me, just as I did last time, I just want to play this scenario out in the heads again. You're a retail trader, as you are, you yourself, and you see earnings come out for AMC stock. Earnings up at 2.25%, 2.25%. Big increase. Very good information, right? Fundamentals are on side. It's got a positive fundamental catalyst for this stock. You see an absolutely big, huge green bar. And what does it do? It crushes the level of resistance above price. Okay, so this is our current candlestick right here. Price action gets a huge breakout above here. We're trading up at 64, then we're going to 65, and price is really taking off. Now, what do you do as a retail trader? Well, you do the same thing all retail traders do. You execute along. You're thinking to yourself, nah, this isn't going to turn around. Look how strong that candlestick is. We've got a breakout of the level of resistance here. Okay, we're looking really good. At the moment, I'd expect price to come right the way back up to 70.50, and we'd be able to capitalize from $65 a share up to $50 a share. Okay, and take that as your profit. But the only problem is we're not waiting for a retest. So price action comes right up through this level of resistance, but then actually ends up coming back down and resisting, okay, and failing to break and close above that level of resistance, equating to price action coming right the way back down to almost the previous lows. So again, we've been caught out by a fake out here. So as we go along, price action comes up to this level again, and this is a really good example here, because price action, okay, comes up to this area. Retail trader's probably entered into a trade idea again here, lost his money. He comes back down here, okay, and what happens here? We get a green doji. So let's say, for example, you've learned a little bit of a lesson, right? Price actions come up, it's come through, retest, got caught out on the fake out. You got caught out on the fake out here as well before the retest came into play in the continuation. Now price actions come to this level and you're a little bit more clued up. You're feeling, it's been a couple of weeks since you last traded AMC. You're feeling a little bit more confident. Price action comes up, it comes back down to retest the liquidity, and then you see a big green doji candlestick. Brilliant. This is exactly what you were waiting for, is it not? You're waiting for the breakout, you're waiting for the retest, you're looking for the continuation. So you get your big green doji, the retail trader ends into the trade idea, and bang, we continue to the downside again, stopping you out. Now, there's something fundamentally wrong going on here, right? Now, so far in this video, what we've spoken about is essentially what happens with 95% of retail traders in the market. It's not the direct cause of 95% of people losing money, but it's a very impactful thing that you guys are all missing out at the moment in the markets that not many people seem to talk about. Now, I by no means, guys, I am not the founder or the creator of the BCR methodology, which is what I call it, the break, close and retest methodology. That's my little catchphrase that I use inside the trading room, but it is not something that I've created. The BCR methodology, or breakouts and retests, have been around since the beginning of time. But the problem is nobody's speaking about it. Nobody, okay? And I really want to go back to this point of everybody selling these holy grail trading systems for like thousands of dollars. You get $2,500 trading systems, you get $5,000 trading systems. Nobody's talking about the basics. Everybody's just so focused on the next big thing that everybody is missing the basics. Now ask yourself, if all of these holy grail trading strategies worked, why do 95% of people lose money in the financial markets in general? Okay, there is something fundamentally flawed with that logic, is there not? So learning this as a founding principle, a foundation principle, and then being able to incorporate that into any kind of any trading strategy that you have at the moment is going to make a really big difference in a very positive way. Okay, so what we're going to be looking at now is the kind of how to go around implementing it. What actually is the BCR methodology? How do you use it? So these are some of the problems that people find without using it. And so what I would implore you to do is wait for a very simple rule, okay? Wait for price to break and close underneath somewhere, wait for it to retest, and continue with 3 candlesticks, okay? And I always will wait for a 3 candle continuation. Now, I've got different strategies. The continuation candles can change. Some strategies I only look for 1 continuation candle if I'm scalping the markets. Other intraday trading, I wait for 3 candles. Sometimes I wait for 2. But I will always wait for at least a big, healthy candlestick in the direction that I wish. And to get you guys off the ground, I wouldn't, because I'm not going to sit here and recommend you guys go away and start scalping the markets with these kind of theories and stuff. Much better to learn the proper way, and that is with 3 candles, okay? So what we're going to be doing here is we're going to be waiting for the break, the close, the retest of the liquidity pools, and then we're going to be waiting for the 1, 2, 3, okay? So you get your 1, your 2, and your 3. You want to see candlesticks making lower lows and good healthy volume to the downside, and then you trigger your trade idea. So instead of executing a trade idea here and price reversing, and executing a trade idea here and price reversing, you are going to wait for that entire thing to come through and execute your trade idea there. And then you're going to watch the trade idea come right the way down from 56 bucks a share right the way back down to 47.50. Okay, and you're going to be able to take that all and soak that up as profit. And the same rules are going to apply. This is a failed breakout. This is a failed breakout, also known as a fake out. We continue dragging this zone along, we'll be able to see many times where it's failed to break and close above. Look at this one here. Okay, imagine the amount of retail trader liquidity executing longs up here thinking this is it, it's going to explode, and bang, everybody gets stopped out when the price action comes back down and fails to break out of this area. Okay, we come back underneath it. Now if we continue dragging this zone along, does it ever break and close above it? Let's find out. I mean, I have no idea. Looks like a pretty big zone. And so if we continue dragging this zone right the way along here, okay, so if we look at this area here, we got a huge fake out. Okay, now in this area, you might argue, yeah, but I could make a profit in there after, you know, price action pullbacks. Yeah, you probably could. You probably could, but there isn't a clean retest. This is the retest, and it fails to break and close above that level yet again. Okay, so as we go along, that's our current price. So at the moment, we're still struggling to actually break out of this supply and demand zone. We are still, you know, still not really trading above it. Now, if we break this level down into 2, so I'm going to copy and paste this, bring that down to the lows there. This, yet again, is another level of supply and demand. As you see, price has been actually ranging inside here for a while. And the exact same rules apply. When you want to take a short in here, we have to wait for the break, the close, and the retest of this level, right? So we've got our range at the moment, AMC moving along sideways. If we carry on looking at this one to the downside and look for trade ideas, I mean, look at that lovely amount of respect, and bounces right back up. So what I'm going to be doing is I'm going to be waiting for one simple thing to happen, okay? And hopefully you guys can all see this simple thing happening right here on our screens in front of us. So we've got a fantastic break close outside of the zone, and look at this, we've got a really fantastic retest to the zone and the continuation. Look at the continuation away from here. Wait for a couple of candles away from there to confirm price's direction, jump on the back of the big banks moves, and we ride the wave back down from either the low here of around 41.57 or the low of 43.31, right the way down to this level down here at 20 bucks a share, offering yourself maybe 23 to 25 bucks a share. You executing a 2,000 to 3,000 share position size, it's not really that large. You're going to be soaking up some serious profits doing the, waiting for confirmation like that. Yeah. So what we're going to do, we'll have a little look on. We'll have a look at something else as well. Let's have a look at TC Energy right here. So this is a particularly choppy market, so it's always good for examples of BCRs happening because they're not so clear cut and they're quite difficult to source. But let's have a look at this area here, for example, right? We've got this level of liquidity which is running right the way through there. Okay, we can tell it's a level of liquidity because we've got a really nice big price action pullback. We've come back down to retest this level, as we can see here. And then we continue along. We use it as resistance, 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 resistance. Then we get a breakout and above. The couple of areas that I really want to show you guys, okay? So first of all, this area here, we get a confirmed breakout. Fantastic. where's the retest? Retail trader liquidity entering the market down at $55 a share. The only problem is we haven't waited for the retest. Retest comes into play, comes back to retest the liquidity pools, triggers the institutional pending orders, and then continues on our way to the downside. We execute our trade ideas with the smart money, which is the 1, 2, 3, and here we're executing on the wave that goes down to $50 a share, not the wave that comes up from 55 to 58. Okay, then we're going to be waiting again for a breakout above this area. So what do? We wait for the break, close, and the retest above. So what we see here is we see a break and a close outside of it, but we see a failed retest. Okay, retest comes back underneath. We wait for a break, close, and a retest here, and this one is successful. So what do? We execute our trade idea here. We get the breakout, we get the retest into the liquidity pool, we get our 1, 2, 3, we execute our trade idea here, we have a little pullback, and then we get on our way to the upside. Okay, now this is really interesting, this level, because what is directly above where we're executing as well? Okay, if we look at a trade idea here, okay, and we've maybe come to this market a little bit late in the day, we haven't quite got in at the earliest possible sign, we're going to be waiting for a breakout of this area. So price breaks and closes above, but we haven't had a retest of this area liquidity. So price comes back down, triggers the institutional pendings. We wait for the 1, 2, 3, hop aboard in the trade idea in between 61.50 and 61.80 and ride that wave to the upside. Okay, and we continue seeing this pattern over and over again, guys. Okay, let's remove all of the analysis for a second and let's look at this bearish wave in TRP. So at the moment we have this big price action pullback, right? Everybody can see that super clear, I hope. We've got this area here, which is a level of liquidity. You know it's a liquidity zone because we have the big deep price action pullback as soon after. So we drag that zone across. Now remember, we don't need to see what's happening ahead of the chart right now. There's no need. We know it's going to be a level of liquidity because it's the beginning of a price action pullback. So all we need to see is that area there. So price action comes back down for a retest, right? Price action's coming down. We hit this area down here. This is where retail traders historically will enter trade ideas at the lows before price rises. Except the problem is here is you're going to have a stop loss that is in the margin of $61 a share to $62.70 a share, right the way back up there, which is a fair chunk in TRP. So I doubt that any retail trader is going to have a stop loss that wide on a daily chart. So what happens here is the retail trader is going to get stopped out. Price comes back to retest the liquidity pool, and from that point on, we trade lower. We come from this area at 62.50 a share, right the way down to 59.30 a share. We come back up, and then we fall back down to a low of 57.75 a share. And all we've done in order to confirm any of these biases is just show a little bit of patience. That's all we've done. We're not waiting for any technical let's say difficult chart patterns. We're not looking at kind of inverted hammers or hammer candles. We're not looking at head and shoulders. We're not using fib retracements or anything like that. We're just showing patience. Every single time there's a technical level, a technical or a dynamic level, it doesn't matter if it's a 200 EMA like the blue line on the screen right now, or a level of support and resistance, or a trend line, anything. If it hasn't had a retest, don't take the trade. Start trading with the smart money. Leave the dumb money behind. Start trading with the smart money. And that, honestly, guys, will definitely lead you in the right direction. Okay? Like I said, not a standalone system, but it's definitely going to have a positive influence over your trading careers. So what I want you to do right now is I'm going to hop back on the camera in a moment, but it would be great if you guys can head to the charts, check it out for yourselves, start trying to plot in these technical levels, look for the supply and demand zones, and look at how price action comes back down to retest those levels, and look at the power that it really holds over everybody in the markets who doesn't have any patience. Alright guys, so anyway, I'll catch you back on the camera in a moment. Take care and I'll see you there. Hello there guys, so that is it. Hopefully you guys have all been able to follow along and digest the information. The video of course is there all the time for you guys to pause and process as you see fit, taking down notes all the way through. Remember the key concepts of the BCR methodology. You have the breakout, you have the close above or below your technical or dynamic level, you wait for the retest, and then you're looking for those 3 candles to continue away from that level. The candlesticks, they want to be relatively healthy. You don't want to be trading 3 dojis in a row. You want 3 normal looking candlesticks moving away, either below or above the technical level or the dynamic level that is in discussion. Okay, now guys, seriously now, this is such a simple process. 3 super simple steps that will make a very positive impact to your trading careers and your trading portfolios if it is implemented correctly. I myself have been trading throughout various strategies over the years, primarily sticking to one over the course of the last 3 or 4 years. Before that, I had a little bit of a mix up of things, and now I've just implemented a brand new strategy which is inside the How to Trade trading room, which is available for all of our traders inside there, many of which have already taken on board with it and are enjoying the benefits of it as we speak. Okay guys, now this BCR methodology, like I said, I'd urge you to go away, hop onto your charts, look at the technical levels, look at those dynamic levels like the moving averages. Moving averages are dynamic, technical levels support supply and demand, support and resistance, and look at how price reacts to these levels once it breaks and closes underneath or above. It hits that level, watch the price then move away. The retests always take place to levels of importance in the markets, and so many times I see retail traders jumping aboard too early, the price action reverses, and then we see messages like, why is the market always reversing against me? When in actual fact, it's just because there is a certain degree of patience that is lacking in the trader's mindset. At this level anyway, you know. So please go away, study the charts, look at how price is reversing to actually come back and retest those technical levels and those liquidity pools that we've been talking about recently, and from that point on we then see price continue, and that is exactly when you want to execute your trade ideas, because at the end of the day guys, we are never going to be able to push the market in the direction we want. The best we can hope for is to jump aboard the train when the big banks and institutions move that money, and that's exactly what being smart money is. Alright guys, so I'm going to wrap this video up here. Listen guys, don't forget to join us inside the How to Trade trading room. Like I said, I've got a full module out on my brand new system which is inside that trading room now, and that's amongst the other hundreds of videos that are inside that trading room as well. So please come and join us in the trading room. Also, don't forget to hit the subscribe button down below and the bell to let you know exactly when the next videos are coming out, and so that you can be part of our ongoing channel where I am going to be personally filling it up with tons and tons of free content over the course of the next few years. So guys, take care, have a fantastic day, and I look forward to catching you in the trading room. I'll see you there. Bye bye.